In a commercial kitchen during a frantic dinner rush, raw inventory is burned through at an incredible speed. Proteins, produce, and dry goods are transformed into plated meals and revenue in mere minutes. Financial accounting moves at a crawl. Cash drains steadily over 30 days, but the profit and loss report only arrives at month end. Survival hinges on food cost percentage, cost of goods sold divided by food sales. Seeing this weeks later gives zero opportunity to adjust. Lag time kills profitability. If a kitchen sews 8-ounce salmon fillets instead of 6-ounce fillets for 3 straight weeks, you cannot retroactively shrink those portions. You cannot renegotiate last week's ingredient prices. The money is spent. To close this time gap, owners often attempt to build daily tracking spreadsheets, manually entering invoices and sales. But in an environment built on controlled chaos, perfect daily data entry rarely lasts past the second week. Even when they use accounting software, they often fall into a trap. They dump every invoice into a single, massive bucket labeled cost of goods sold. When food purchases are mixed together with paper takeout containers, cleaning supplies, and alcohol, the top-line number becomes useless. You can no longer calculate an accurate daily food cost because you don't know exactly what you spent on the food itself. The solution is to remove human data entry from the equation. Instead, we can build an automated bridge connecting an AI directly to the raw, underlying accounting database. To get real-time visibility and margins, a business has to stop relying on flawless daily human discipline. It requires an automated intelligence system that reads data as it flows. Step 1 is cleaning the data environment. For an AI to accurately analyze your margins, it requires a perfectly segregated chart of accounts. This means breaking apart that massive COGS bucket. Isolate food accounts from paper and alcohol. Next, standardize vendor records. If a distributor is logged as Cisco, then Cisco Foods, the AI split the analysis. Every invoice must align to a uniform profile. With a clean architecture in place, the next step is access. By logging into the Intuit developer portal, you generate an app registration, which provides a client ID and a secure client secret. These credentials authorize the secure link between your accounting file and the AI. Clean data architecture and precise access credentials are the mandatory foundation. Connect an AI to a messy accounting file, and it simply analyzes and amplifies existing errors. Now we execute the connection. Running a Python connector script initiates a handshake between your accounting software and the AI, linking the two hubs. This triggers an authorization sequence, opening a secure browser window to grant specific access permissions. Once approved, the systems are successfully connected in a strict read-only state. The AI pulls financial data, but it cannot write to or alter your permanent records. But data access alone is not enough. We must teach the AI the operational realities of your specific restaurant by defining business rules. We do this by uploading a set of strict guidelines. We instruct the AI that the target food cost is 33%. The acceptable variance range is 31 to 35%, and we list the primary and secondary distributors. We then map individual menu items to their unique target margins. For example, setting the seared salmon dish to a precise 33% cost goal based on its recipe. These rules provide context, allowing the AI to look at raw financial transactions flowing from the ledger, and constantly cross-reference them against your strategic intentions for the business. Layering business logic over database access provides the AI with the context needed to function as a specialized financial analyst. With the system active, the end-of-month accounting scramble is replaced by a 2-minute morning routine. Before service starts, you ask a simple natural language question. What was my food cost percentage yesterday? The AI responds instantly, flagging any metric outside your target range, like a 38.2% cost driven by an overportioned salmon entree. To provide that answer, the AI pulls categorized food expenses from the latest invoices and immediately correlates them with yesterday's point-of-sale data. Because you have this information before the kitchen opens, you can take immediate operational action. You can walk to the line and instruct the chef to reduce the salmon portion from 8 ounces down to 7 ounces. Detecting a portioning error within 24 hours allows for an immediate fix, preventing a single kitchen mistake from depleting an entire month's profit. The system also executes back-end analysis, like automated multi-vendor price comparisons. You can prompt the AI to look at your top ingredients and compare the line item prices between two major broadline distributors over the last 7 days. This chart compares those vendor prices. The AI identifies the exact discrepancies, instantly highlighting specific items, like prime ribeye or fingerling potatoes, where one vendor is significantly cheaper than the other. Armed with this precise data, you can contact your vendor representatives and renegotiate your rates using hard, evidence-based comparisons. Daily oversight of expense categorization and analysis moves the owner beyond reactive accounting. They maintain consistent control over the profit margin of every plate served.